Okay, everybody, it is me, Gregory Mannarino. This video is a little early. The market is still open. It is 10:32 a.m. Pacific Standard Time. I am getting this video out now because I can't do one later. But there is so much going on. I have literally a page of stuff that I got to go over with you. Well, some of it is just too unbelievable, but it is what it is in this environment. So let's start off with this. As I said, market is still open, 10:33 a.m. Pacific Standard Time. Nice little rally today. Stocks higher across the board. The dollar remains markedly lower today. 10-year yield 3.32. Okay. Would the market like to see that a little lower? I believe so. But with the pressure on the dollar right now and the promise of more easy money, which isn't going to stop, especially after we cover what we need to cover, you can understand what's really going on here. Anyway, market's happy. The market's loving it. The 10-year yield can settle here, even a little higher, as I've covered recently, as long as the dollar weakens. The dollar weakens here. And I believe there's a high potential for this. I've said for many, many months now that the US dollar would continue to gain in its relative strength. This call has been spot on for like a year. But in the current environment, with the promise of more easy money here, which is going to happen here, there's just no doubt about it. This is, again, the plan of central banks here. It's multiple fold, and we're going to cover more of that as we move through this video blog. But again, they're not going to stop inflating. There is a race to the bottom. Central banks around the world, they don't want their currencies strong. Nothing would make, I guess, China happier than seeing the dollar here gain in value. Again, it hurts U.S.-based multinational corporations. It also hurts commodities. You know that. Anyway, so rally on Wall Street, 10-year yield, looking okay. Weaker dollar, all well and good. Gold catching a bid. Silver is up nearly 6%. 6%. Crude oil is catching a bid right now. That's the story on the market. Now, we need to cover a few things here. Going back to central banks, I want to hear from you. Do you believe, are you ready? Here we go. Do you believe it's just a coincidence that central banks around the world have all missed their inflation targets to the upside by exponents? By exponents, the Fed had what, a 2%, 2.5% target on inflation. We're like at 9%. Same thing with the European Central Bank, other central banks around the world. Do you really think this is an accident that central banks were all data dependent? You remember, how Yellowstone Powell comes out of the woodwork telling you how the Fed's data dependent. Other Fed freaks come out telling you the same thing. Christine Lagarde, data dependent, data dependent, data dependent. Really? Oh, is that why all of you missed your target? By multiple hundreds of percent? Is that the reason why people are being crushed right now under an inflation wave that is not going to get any better? No, hold on a minute. Here's some of the fake news from today. So turn on Bloomberg, pick one, CNBC. So inflation is slowing. Actually, this is bullshit. I'm going to tell you right now. The only thing right now that has come down a little bit as of late is energy. Energy prices have come down as of late. It's the phenomenon of the midterms. Okay, you know how this works. People, do your own homework on this. Every single midterm election cycle, by some miracle, crude oil falls, people pay less for gas and energy, and they think the current administration is really helping them out. No. It's always the phenomenon. Right after the midterms, everything goes back to normal. And that's what's going to happen here too. So the narrative here from the mainstream propaganda ministry is inflation is slowing. Inflation is not slowing. It's slowing in energy only. Food, basic necessities, rent. I mean, you want to talk about anything else? It's all going higher, and it's going much higher as central banks continue to inflate, colluding with their respective governments to pull cash into the now. You all know this here, people. So the other thing here that is potential to push food inflation even higher is this railroad strikes getting a lot of attention here. If it happens, expect that to affect, imagine my surprise, the cost of food. It's an incredible situation here. Here's another thing that I find disturbing and not shocking at all. So we found out today that more people, more prior members of the middle class are falling behind on loans, paying utility bills, mortgages, and everything else. Imagine my shock here. You and I covered this how long ago? I don't know, a couple years maybe. We covered it again right here, where we would see prior members of the middle class struggling, trying to claw themselves higher to stay or give the illusion that they're in the middle class still by borrowing beyond their eyeballs. And now they can't afford to pay for the loans they've taken out. They can't cover their utility bills, borrowing beyond their eyeballs. It's just not going to stop. So that is a very sad phenomenon that I believe, and I would have to believe you would agree, it's going to get worse. People don't know another way. The first knee-jerk reaction is, you know what, I'm going to borrow to try to make ends meet here, and I'll do better in the future. But what they're not factoring in here is real wages, that is earnings based against the actual rate of inflation. Real wages are in the negative. Savings rates are way deep in the negative here, and people continue to bury themselves in debt. It's a recipe for disaster. You can never, ever, ever borrow your way into prosperity. I mean, just like a government can't do it either. You can't, spend money on this, that, and the other thing without there being a price to pay for it. Inflation Reduction Act, hundreds of billions of dollars to get us out of this inflationary environment. No, it's making it worse. And we all knew that from day one. We covered it. This whole thing is such a freak show, people. It's incredible. Here's something else going on I want you to pay attention to. So market sentiment is turning bearish. Now, more bearish. So you got more bears cooling out of the woodwork. When I see that, I can't help myself, people. I get bullish, okay? The crowd is generally wrong. I've covered with you recently what you need to focus on. If, in fact, we see some stabilization here in the debt market, if, in fact, the 10-year yield settles where we are or even higher, okay, as long as we don't get these massive gyrations in the 10-year yield, which creates this yo-yo effect in the stock market, okay, that alone is bullish. A weaker dollar is bullish for the market here. So bearish sentiment, to me, is is bullish. I mean, duh. Can I get a duh, please? Yeah, honestly. Anyway, look, you know what bothers me the most out of all this news here today? It's not so much the fake news or the propaganda about inflation that's slowing, which it's not. Energy is the only thing that has come down lately because of the midterm phenomenon effect. Everything else is going up here. Does that bother me? No, not really. It's something that we have expected here. Does this potential railroad strike bother me? Not really. I don't think that's a surprise either. Coincidence that central banks have all missed their targets with regard to inflation, their inflation targets? No, that doesn't surprise me because we know what they're going to do. Central banks are determined to inflate, and they're not going to stop. They're not going to stop. So that doesn't bother me either. What bothers me here is hearing that more people are falling behind. People are hurting. People are suffering. They don't know what to do with themselves because they're being propagandized. They're being fist-fed fake news upside down, backwards, and sideways. And that mechanism is going to get worse. Understand, it's always the same thing. If the mainstream media keeps propagating a lie, it becomes real. That lie becomes real, and people start to buy it. You understand? And then people wonder what they are doing wrong. And what they're doing is deliberately, or maybe they don't even realize it, burying themselves in a very, very deep hole. Forget about putting yourself in more debt here, because that's the goal. What do central banks want to do? Not only create nations themselves that are slaves to the central banks, but they want to create people that are dependent on the system, people that are slaves to the system. And it seems like this plan of theirs is working out perfectly, okay? It's an incredible thing. It's slavery on a truly unbelievable scale. And I really feel that it's going to get much worse, despite what may happen to the stock market. The stock market, again, if the debt market stabilizes, dollar gets weaker, crude goes higher, market's going up. And that does not mean that our economy is doing it. There's no connection here at all. Zero. You know that. Between the stock market and the economy. The economy is done, over, finished, free fall. Not just here in the United States, but around the world. These are central banks. Central banks are responsible for the financial system and the entire global economy. It's not policymakers. It's central banks. Understand? And they're deliberately driving the world into an economic meltdown. So what? So they become the lenders and buyers of last resort. So they become the ruling body of the world collectively. Make sense to you? It should make sense to you, because that's exactly what's going on. All right, people, I want to hear from you. What do you think about the fake news? Inflation is slowing. Really? Can't make that up. Can't make any of this stuff up. Coincidence that central banks are all missed their inflation targets by like hundreds and hundreds of %. It's unbelievable to me, really. Anyway, look, love you a lot. I will see all of you in the morning. Please share the video. Please comment. I'm out of here.